All right. Good morning, everyone. My name is Brad Roltgen. Welcome to the Fresno Bitcoin and cryptocurrency investors meetup. We are based in Fresno, California, but since COVID has been with us, we've gone online with Zoom meetings, and we've been fortunate enough to have folks from all over the country join us, as well as from a couple different countries. So don't let the Fresno name dissuade you from joining us in the future on future meetings. Some people have asked me, do you have to be in California to join? And I'm like, absolutely not. Actually, I'd almost like to change the name of the group to English speaking crypto enthusiasts, because, you know, we're everywhere and everybody's welcome. So welcome wherever you're from. I know I've already seen some folks from the Eastern time zone, so good afternoon to you. And excellent. If you haven't seen the Google Doc yet, let me just share that with you real quick. For those of you that are new, try to do, let's see, Google Doc. Okay, so I have this Google Doc set up, and what we use this for is a place to put all the links and notes that we discussed throughout the meeting into this document. And this is a way to kind of create a resource during the meeting that we can refer back to after the meeting, whether it's tomorrow, next week, next month, that kind of thing. So I'm looking for as many of you to contribute and add to that as possible. There's a link in chat, and I'm going to link that again. Let me paste that link. It's also on the event page here, but let me drop that into chat here again. And if you just click on that, you'll be able to view that document. But then if you click on the edit or request edit access, I can give you that access, so then you can contribute to that as well, because I need more than just me adding to that document. So that's how that works. And I do have this question up. Let me back up. I wish I had like 3 screens to share here because there's so much info. Back. I hear Dina. I think I recognize that laugh. How are you doing this morning?
I'm good. How are you?
All right, good. Got too much going on. And then if you guys would. Yeah, just if you would jump in the chat, if you've used one of these crypto tools before, either one that we had on the list or any other ones, just type that name in. And if you haven't, just type in no, just to kind of give me an idea of who's used what and that kind of thing. Get somebody new. Oh, good morning, Cindy. All right. Okay, so it looks like we got a lot of learning going on here. All right, good. So let's get into it.
I don't know what to say.
Oh, somebody have a question there? Hey, was that you, Terry? Good morning.
Good morning. Sorry, I thought it was muted.
Oh, no problem. No problem. Jump in anytime. And if you guys have questions, feel free to stop me, jump in, question, type it in chat, that kind of thing. I think, Dina, I'm gonna ask you if you would kind of monitor the chat. And if a question comes up there, jump in and kind of relay that to me, if you wouldn't mind doing that. All right. So first of all, disclaimer, this is not financial advice. I am not your financial advisor. I am Bitcoin certified, but that doesn't mean a whole lot with the IRS. So I'll just share that with you. I went through the certification to become Bitcoin certified. So the nuts and bolts, what we're talking about today is lovely Form 8949 that the IRS wants us to complete if we've done any cryptocurrency trading, especially if we've made any profits. So this is a form that, and if we have any tax experts or CPAs or that kind of stuff that have dealt with this before, feel free to jump in and contribute as well here as we go. But this is the form they're looking for us to fill out, when we file our taxes. The challenge is, if you can see here on the little column where this person has filled out their Ethereum gains, hopefully, well, it looks like there's a few losses and a small gain. So that's kind of what a lot of us have experienced. Let's see. Nate asks, is the same form for miners? Oh, okay. On the miners, good question. That is considered income when you're mining and get income from mining. So that's different than trading. And thank you, Anthony, for jumping in. We'll definitely be leaning on here in a little bit. So this is the form they're looking at for us to fill out. The real challenge on this, if you see in column D and E, it refers to the sale proceeds and then your cost basis. And they're doing that in dollars. And, when I'm trading Ethereum or Bitcoin or Tron or, BNB, I'm not really keeping track of those transactions in dollars. Anthony, have you had any experience doing that process manually, or have you always used tools to do this kind of thing?
Well, Brad, I have a different approach to crypto transactions, and some of you are probably going to think I'm crazy. But I disagree with the IRS's interpretation that any transaction from crypto to crypto is a taxable event. I take the opposite approach. Until I convert it to fiat, I don't record any transactions. So anybody wants any advice on that and why I'm doing that, go for it. But if you guys are going to record these transactions, I can't help you with that. It's a tough one.
Okay. Well, I appreciate that perspective, because that was my, I don't know, back 4 or 5 years ago, that was my thought or theory, that until it's in US dollars, it's just like something else. And so I was surprised when that ruling or guidance, whatever, came out talking about any crypto literally transaction, becomes a taxable event. So
Right.
I'd like to get in here for a second and just ask for a little bit of how you support yourself in that argument. Now, I agree with the argument, but I'd like to know how you support yourself from a legal or tax standpoint.
Sure. What ends up happening is the IRS basically is trying to convince you that a transaction between cryptocurrencies is a taxable event. But the IRS doesn't accept Bitcoin as a form of payment. They don't accept Ethereum as a form of payment. They don't accept anything other than fiat or dollars. So they're asking you to voluntarily tell them that your transaction created a taxable event and it was in dollars, and you have to convert your Bitcoin or Ethereum or whatever you're transacting into dollars to pay them. So you literally have to sell your asset to pay your taxes. And my theory is, and it's been proven, that until you convert it to fiat, if IRS wants to accept my Bitcoin, I'll send them my Bitcoin. If they want to accept my Ethereum, I'll send them my Ethereum as far as profits. But until they accept that, I'm not paying any tax on my transactions until I convert. Plus, I'm using a vehicle and an LLC to do that. That's non-reportable. So it's kind of self-voluntary. That's what I mean. You have to understand, I'm taking a radical approach to taxes. And the radical approach to taxes is everything is almost self-reporting. And if you look at line C on this form, the checkbox, short-term transactions not reported to you on form 1099B. So nobody's reporting that to the IRS, you're self-reporting. And there's no way the IRS can audit you to find out what transactions you performed. So my philosophy is, until I convert it to fiat, I'm not paying my taxes on transactions. I'm not recording them. Same thing with mining. Same thing with staking. Anytime I earn Bitcoin for staking my Bitcoin or Ethereum for staking my Ethereum, I'm not claiming any of that until I actually convert it to fiat. So again, it's a radical approach. A lot of people think I'm crazy. A lot of people think I'm going to jail, but it hasn't happened yet. And it's not going to happen because I've got a 6-page report that I sent, a 6-page letter I send to the IRS every year when I get a 1099K from Celsius or Crypto.com or I forget what the BlockFi. that the IRS basically says, okay, we saw your 6-page letter, you don't have to report your 1099K, because they pay me in like-kind staking.
Okay, good. Thank you, Anthony, and thank you, Scott, for bringing up the question as well. I don't want to get too sidetracked on that, although that may be a discussion we get into, further down the road, but
Sure.
Although Brad, one more thing to add.
Sure.
Deborah.
Yeah. Hey,
The
Deborah.
IRS has a website. So, and on the website, the guidance is, let's say, there's not the clarity, black and white, that you want to be looking for. But when it comes down to this stuff, I'd encourage everybody to visit the IRS website just to get themselves a foundation or a baseline, and then talk to your tax advisor, because there are a lot of different ways to approach this.
Excellent. And Anthony, somebody asked in chat about seeing that 6-page report. I don't know if that's something you could share or.
Not yet. I'm actually rewriting it for this upcoming tax year. So when I get that filed and I get a response, I'll be willing to share it at that time. It may be a little late for some people for this coming tax year, but I'm rewriting it to make sure that I cover all the changes the IRS are trying to make. But yeah, they're trying to get your taxes. They're trying to get your money. And it's, like I said, it's self-reporting. And all you have to tell them is, number one, if you really want to take a radical approach, don't report it. How are they going to know? It's kind of like you go to a garage sale and you buy something for $1 and you sell it on eBay, or if you sell it at your own garage sale for $5, are you reporting that $4 profit on your taxes? I'd say 99.99% of the people do not report that. There's no way the IRS can audit it. Are you committing fraud? Well, in the IRS's eyes, yes, but what are they going to do about it?
So I'm a bit new to this. This will be my second year, but is Coinbase or any of these other exchanges or DeFi networks filling out any forms and reporting on an individual basis, such as a bank with property, a list of transactions per individual? Because you can link, of course, they know the accounts and the hash rates associated with the accounts.
Well, I'm not sure that the Coinbase sends your wallet address to the IRS. I do know they send the transactions over a certain dollar amount, but I don't use that. I use Coinbase as an on-ramp, and I've gotten away from Coinbase. But I come in and I buy my tokens or my coins, and then I transfer off of there to a decentralized exchange. So there's no way to track it. They can see my purchases, but that doesn't mean they can see my sales, and they don't even know if I'm selling. And they're not going to report a transfer because the transfer is not taxable event. It's just a transfer off of the site. So again, we're getting off track here because I know a lot of you want to talk about Coinly and accounting and all that on how to track that stuff. I don't use any of that because I don't track my transactions. I only track my buys and my sells to fiat, and that's it. So I don't want to tie up the whole meeting for that. I do apologize for.
Yeah, no. Thank you, Anthony. I appreciate the input and the different view and that kind of thing. So, I mean, this is evolving every year. I mean, if in crypto, things are changing drastically, every couple of weeks, month to month, looking one tax year to another is, huge leap. So we'll just try to keep up with it or see
Can
if
I
the
ask
IRS
a question?
Yeah, go ahead, Janet.
Oh, okay. So even on those DeFi platforms, my awareness is that those are public blockchains that all of those transactions can be tracked by the IRS. Anybody that would, be able to look at those transactions.
Absolutely, but they don't know who the owner of those wallets are. Those wallet addresses are. Sure, the IRS can look at millions and millions of transactions, but they're not going to be able to identify that wallet address belongs to Anthony Forrestier living in Fresno, California. They just see all the transactions. Yeah, it's public information. It's just like the credit card. When the IRS audits you for your travel, let's say you're traveling somewhere and you're spending all your money on your credit card, they don't ask for your credit card number. They ask you for the transactions that occurred on that credit card that justify the expenditures. Well, if you don't report the transactions, there's nothing to audit.
Right. So when you get on these tax softwares, you're actually
self-reporting.
providing wallet addresses.
Yeah, you're complying with the IRS. Why would you want to
And
do
then
that?
you're in compliance with the IRS. So what you're saying is basically as long as you keep all of your wallet addresses
Private.
where no one has any access to that information. They could never locate who you are.
Absolutely, absolutely. That's why these tax programs, they're self-reporting programs. You're literally giving that information to pay taxes on yourself when you don't have to. I would, but again, that's just my philosophy. Again, people think I'm radical. I understand that, but it works for me.
Right. So if you ever were audited, basically, I think that they call it a good faith effort. You know, if you were ever audited and someone found that you were doing those transactions on DeFi and not reporting them, if you were going to need to defend yourself, if you use a tax software, you're actually at least showing that you made a good faith effort to.
Yeah, but you have to
Provide
realize
the
what
information.
audits do. The IRS does not send you a blanket letter saying, I'm auditing everything, every income and every expense that you have showing on your tax return or lack of showing on your tax return. It doesn't work that way. What the IRS does is they audit your expenditures based upon claiming of an expenditure, or if somebody sends in a 1099 for you and you don't claim it on your return, then they're going to send you a notice saying, hey, somebody reported a 1099. The IRS is not going to send me a letter here in Fresno, California and say, Anthony, we think you own cryptocurrency. Tell us everything you've done in the last year for your transactions. They don't do that. It's not a fishing expedition. They only record an audit when you don't claim something. And then let's say your bank account has $1 million in it. Then they'll go, okay, Anthony, we have $1 million of money deposited in your transaction. Where'd you get the money from? That's what they'll audit you for.
Right.
But they're not going to audit these transactions if this money's nowhere reported anywhere. It just sits on a decentralized exchange.
I understand that, but when you make money and you're going to transition that money back into US dollars,
Then you're going to pay the tax.
so what you're saying is you just pay it on the end of coming back into the US dollar fiat system,
Yes.
but
exactly.
not anything in between.
Correct. You bet, 100%.
And you're saying they cannot track that despite the fact that these are public blockchains.
There's millions and billions of these public there's billions of wallets. They're not going to know which my wallet is unless I tell them what my wallet number is. And I've got multiple wallets. I've got a wallet for Solana. I've got a wallet for MetaMask. I got a wallet for everything. I've got wallets everywhere, and they're all different addresses, depending upon Binance. You know, I got a wallet for Binance. So they're not going to know what my wallets I own unless I tell them.
All right. Yeah, good
Anyway,
question.
we're getting off track. I
Yeah,
apologize.
let's move on. So these are
Maybe for me to, you guys have my contact information or send me an email, whatever. Maybe I'll put my contact and ask me questions separately. That way we don't tie up this whole meeting.
yeah, and
and-
we can fill in a little more at the end after we get through these different services just to give you
Yeah,
an
and I'm going to
idea.
be leaving here shortly, so I'll put my contact. I'll put my email address in the chat. You guys can email me if you want. 'Cause
Okay.
I have to leave anyway.
Appreciate it. Thanks, Anthony.
Sure.
Yeah, and especially the point I want to get across, because I've had some people reference that they were afraid to trade or discouraged from trading because they didn't know how how they had to report it to the on their taxes, that kind of thing. So I definitely want to show this info so you guys aren't afraid of that process and that kind of thing. All right, so let's see, let me switch over to Cointracking.info. So I'm going to share Cointracking.info. I'm going to start with this one because I've been using it since 2017. And again, this is just going to be kind of a high level look at it. We're not going to get into the depths and how to use and how to do all the functions. But what it does is, in addition to tracking and reporting for taxes, it also brings all of your coins into one place on the dashboard. So you can look and you can see the value, here of all coins. And I kind of have to laugh because all this information isn't right, because I've changed exchanges and wallet addresses, that kind of thing. But just to give you an idea, it shows, okay, my first trade was back in 16. The last trade was 3 days ago. I'm not sure what that one is, but if you want to look at your crypto holdings in one spot, you can also use this as a tool to do that. So yeah, this is crazy. I wish I had all this, some of this stuff, but I don't. Anyway, so what you do to, the first spot most people start with is you enter the coins, and you can attach coin tracking to the exchange that you use, and especially if you're holding the coins there, through use of an API, which is an automatic process, and they'll update that at least once a day type of thing, so your dashboard stays current. So it's just a matter of going through and saying, okay, Binance, Bittrex, Gemini, Coinbase down here, these kind of things, and going through and attaching your account at those exchanges to coin tracking, and then it'll bring those in. You can also get a CSV file from those exchanges, and probably even a lot more of them, and import those manually. That's something you're probably more going to do if you're just using this once a year for taxes, because the API is nice because that constantly updates the your information on the dashboard there. Then you can do the same thing with wallets. So for example, here it's got Exodus is one of my favorite ones. It's got Trezor, Ledger, Live. You can also do specific imports by the blockchain, where you just enter your wallet address. So if you've got a wallet that's not supported, you simply just enter your wallet address for that specific coin, and it follows it that way. And then they've got some other imports here to do as well. So that's how you get the information into this, or tie it together. So that isn't too bad. Then you can go to all these. Yeah, I don't even use these. So we've got trends and yeah, all kinds of data. But it gets to, at the end of the year, you're going to do your tax report. And yeah, so this is where I went nuts last year is I started using a trading bot. And so all of a sudden I was doing, hundreds of trades a week. And so I ended up doing over 5,000 trades last year. And I started using that bot in November, and obviously in November, my trades, exploded, and then December as well. You can go in and, they support different countries, which, I look at this, I go, oh, I guess all these other countries, do tax returns as well. I was a little focused on the US and, didn't realize, Tunisia filed taxes, but I guess they do as well, which, should be expected. A couple settings here. You can export data for, different tax years, this kind of thing. It'll also generate files that you can import into a few different tax software like TurboTax and a few other ones. Some of them I didn't recognize. They may be, more professional level software tools, but you can look at that. When you choose one of these tools, you may do so based on the report and the exports that you get out of it. If you're using ABC tool, or to do your taxes, you want to make sure that you find a service that supports that ABC tool, that kind of thing. Let me check the chat here. Robinhood Robinhood isn't a real cryptocurrency exchange, so I don't know. I don't know if they're on here or not, but that's a whole nother story. I would think they would almost issue a 1099 for you, because they do deal only in the crypto, or I'm sorry, in fiat, in and out. And yeah, thanks, Jason. We'll talk about the tax loss harvesting a little bit later, but thanks for joining us. All right, we had so any questions real quick on coin tracking? I don't know if any of you have tried to use it. Let me try to pull up the cost of it, because they do have, where is the pricing? Here we go. Just to give you an idea of the way they charge. So if you do under 200 transactions, it's free. And then up to 3,500 transactions, it's $10.99 a month billed yearly. And that's what really perturbed me, because with those bots, it put me into this next number of transactions. So I had to pay a little more to use that. But just to give you an idea, they even support unlimited is $55 a month. So hopefully if you're doing, a ton of transactions, you're making enough money, and $55 a month isn't a big deal. Let's see. Ahmed, that's transactions in total. So when it looks at it, I believe for the, I don't know, it might be, that's a good question. Maybe it's up until 200 transactions. My thinking was that it was that number of transactions per year, per calendar year, that you were going to report on your taxes for that year. And I believe that's the way it is, but now that I think about it for a second, that may not be completely true, but good question on that. All right. So any other questions on the coin tracking or anything like that? All right, let's see. Walter, I know you had mentioned Cointracker and Coinly. Coinly is one that we've heard a ton about. Can you share a little bit about those? I can switch the screen over. You can share if you're able to do that or interested in doing that. Where did you go, Walter? Let's see. Can you unmute? It looks like you're muted there.
Yes, go ahead. What was the
Welcome.
question?
Yeah. You had posted that you were using Cointracker and Coinly, and just wanted to see if you could share a little bit about either of those with us.
That was not me.
Okay.
But
We
there
got
might
two
be another
Walters.
Walter.
Here's the other Walter. I was wondering because I didn't
There you
remember
go.
your last name. All right, more Walters the better. Let's see. I'd asked him to unmute. Let's see. Oh, Ken, the bot I used was not Digibot. I was using Bitsgap, as well as the one one of the ones you can use in KuCoin. Those are built into KuCoin. Okay, looks like Walter's not unmuting. Anybody else have any experience they'd like to share with us on any of the tools that they used on that? Let's see if anybody posted in the Google Doc. Okay, all right, we'll come back to that. Deborah, you want to talk a little bit about the strategy and why we did this meeting in November and not in March?
Yeah. So if I remember properly, it all comes down to capital gains. We'll start there. So if you're going to sell any cryptocurrency, you bought it at 10, it doubled to 20, you sold it for cash, you got to pay capital gains on the difference. Similarly, if you bought something at 20K, let's say, and you sold it at 10, you have yourself a capital loss. Now, by default, with the IRS, I believe they do I think it is a last in, first out scenario, which means the last transaction you do, and again, I'm going to assume we do it for cash, and you sell it, they're going to base it on the price that you paid for the last transaction. There is also something called a first in, first out. Let's say you bought Bitcoin over a year ago. That means anything over a year ago that you hold, if you sell and you do have a capital gain on it, you only pay 15% tax, versus if it's less than a year, you pay whatever percent tax is in your tax bracket. So if you're making 500K a year, you're going to be in a very high tax bracket, maybe 30 some odd percent perhaps. So you don't necessarily want to get hit with that. Maybe your strategy is, I don't want to pay 30-something% on my gains. I want to use something that I bought over a year ago and only pay 15% on it. Or conversely, if I have a loss, I don't want to take something that I bought over a year ago and only pay 15%. I want to take a full loss on it. So what you want to really be able to do is look at all your transactions. Let's say you have Bitcoin and you've bought it for all different prices over the past couple of years, and Bitcoin was at 60K, a few months ago, and then it dropped to 35. Remember when that happened? Maybe you sold a Bitcoin that you bought at 60 and you sold that 1/10 of a Bitcoin or a full Bitcoin at 35. Now you have a 25K loss. And you say, well, I want to use that 25K loss because maybe before the end of the year, I'm going to sell some Bitcoin at a profit. And I want to offset that profit with a loss, right? So the whole idea of tax loss harvesting is to look at what you project in capital gains for the year. And by the way, it doesn't have to be in Bitcoin. Let's say you sell a house, right? Okay. Let's say you have a property. Let's say you sell a house and you owe capital gains on your house. It's any kind of capital gains you're going to see for the year on your taxes. And if you owe the government 20K, 30K, 100K, whatever it is, 5K, maybe you want to use something that you had a loss on, one of your cryptocurrencies that you bought high and sold low, and you want to offset that against one of those gains. So the tax software, really what you want to do is you want to download your transactions into a tax software that gives you the ability of actually identifying. Some of this tax software has a feature where, you know, it can show you, hey, you bought this Bitcoin at this price, you sold it at a lower price. If you want to do this, quote, tax loss harvesting, you know, where can I find losses? That's what you use this software to do. So the reason why we're doing it before December is if people have it in their head to either sell Bitcoin and they anticipate a gain and they want to take or not sell, or they want to take an additional loss before the end of the year. I don't know if that's possible in Bitcoin, but it's not just Bitcoin, it's any cryptocurrency that may be down. Maybe somebody bought Theta at 15 and today it's 7. All right, it lost half its value and you want to sell it. Now, here's the thing. Once you sell your cryptocurrency at a loss, it is a loss. So if you don't buy it back, if you just keep it in cash, you know, you got a loss on the books. What do they say? They say it's never a loss till you sell, right? But what if you decide to sell that Theta and put it in something else you think is going to go up, like Solana, and offset that? And that's what people do with equities. You know, maybe they bought Apple at a higher price, they sell Apple, and now they want to put the money in Tesla, right? And you can do that. What you can't do necessarily, you can't have bought Apple at 100 and sold Apple at 50 and take a $50 loss and then an hour later or a day later buy Apple back at 51 or 49. Because the government goes, that's not good. They're just taking a loss, but there's no skin in the game. They bought it right back. And that's illegal. You have to wait 30 days to do that. Now, is it illegal to have sold Bitcoin and buy it back an hour later? Well, interestingly, since Bitcoin's property, the IRS hasn't come out with any clear guidance on it. But if you want to be safe, you know, and not wait for retroactive guidance, etc., maybe you just sell your Bitcoin, you put in Ethereum. You put it in something that you think is going to gain in tandem, and just to be safe. But because Bitcoin's property and Ethereum's property, this is kind of up in the air right now. The IRS has just not been clear about its requirements. So you got to keep all these things in mind. But coming back to what Brad said, why are we doing this now? We're doing this now to allow people to strategize their capital gains or capital losses, to actually look and take one and, you know, offset it. Look, use this tax software to see, what did I buy things out? What did I sell things out? Or maybe I want to sell something at a loss. And, you know, maybe you sold a property and you've got capital gains on property and you want to sell something that one of your cryptocurrencies at a loss to help offset those capital gains you're going to pay on your property. And then put the money in a different cryptocurrency. You can do that. You can take that loss, put in a different cryptocurrency, hope that that other cryptocurrency is going to track as good as the one you sold. and then hopefully you're ahead of the game. That's what it comes down to. Did I make, was that clear? You know, it's hard to explain that without actually showing some examples.
Yeah, that's a good overall view. Any of our CPA folks like to add or contribute to that thought process? Let's see, Stephen, I saw you there. You've got a couple cool letters after your name. Feel free to jump in. And let me share.
Brad, let me just say something real quick, can I?
Go ahead. Go ahead.
One of the things to keep in mind, what I find with a lot of clients where they get confused about capital gains is those rates that Deborah was talking about, whether it's going to be on, this is just subject to long-term. We're not talking about short-term gains here, but we're assuming that there's issues or you have long-term gains. The rates that apply to long-term gains, whether they're in the 0 bracket, the 15 or the 20, you have to take into account your other income on your tax return. So for example, if you're married, that 0 rate bracket goes up to about 80,000. For the sake of argument, let's just say 80,000. That doesn't mean you can have 80,000 of long-term capital gains that get taxed at 0. If you have $60,000 in wages from your day job, only then the 20 gets added to that on the top. So that's one thing that gets a little confusing because those brackets for long-term gain apply to your total income on your tax return, not just the gain income. So that's one thing that it just comes up over and over again where people think, well, I only have $20,000 worth of capital gains and the bracket goes up to 80,000 or 40 if you're single. I should be taxed at 0 for those federally. Keep in mind, California, and I know Brad was clear that this is greater than just California, but California doesn't have a separate rate structure for capital gains. So you're still going to get taxed on that, 0 to 13% in California. But let's go back to the federal. If you have that 20,000, if you already have $100,000 worth of wages between you and your spouse, then you're going to get taxed at 15% on those. So keep that in mind. On the flip side, this is the great planning opportunity to harvest gains if you have $60,000 worth of income. If you're sitting on a bunch of gains in your account and you only have $60,000 worth of other income, take the 20 because 0 is cheap tax. That's really cheap tax. And this is one thing we miss a lot. This happens in a lot of scenarios where people miss out on opportunity to get income at really low, if not 0 tax rates. And that's what needs to be done between now and the end of calendar year, because unlike IRA contributions, you can't backdate transactions into the prior tax year. They have to occur before the New Year's Eve party. Okay, thank you.
And Jeff, one other comment. If you take losses that exceed what you might need to use in the tax year, those roll over, correct? Or gains for that matter, I'm assuming.
Yes, there's a $3,000 limit on the losses that then roll over indefinitely. You can use them if you have more than 3,000. You can roll those over to future tax years. Is that what you mean?
Yeah, exactly, and that's a really important point.
Yep.
All right.
So the idea is to make sure you go to somebody like Jeff. What I'm doing as an example, I'm talking to my accountant right now to do an estimate of taxes that will help me understand if I have to shore up anything before the end of the year.
Yeah, this is just, I've seen this over the years. I won't tell you how many years, but over the years, this time and time again, you get to doing the tax return in February and March and you're going, why didn't you sell the Apple stock that Deborah was referring to and then turn around and buy something else, or wait the 30 days like she talked about, because you don't want to get caught by that wrapping law. But why didn't you do it? Because you could, it was like a sale. It's like a sale on taxes right now because you had room to take it. That's the big deal with this 0% bracket. And again, this has nothing to do with short term. You need to make sure that these transactions, you hold them for 366 days, because otherwise all bets are off. You're completely paying full rate in taxes and the sale is null and void. Your coupon's expired, so to speak. You ain't getting the sale rate. So keep that in mind. But this is when you've got to plan this out and go through these. and not drag your feet and put it off until next summer and try to figure out what your transactions were after you extend your return.
Awesome. And just Jeff, Ahmed had a question here in chat. He says, does it cap at 3K or does it add up every year? So I think it's more of like a rollover.
Yeah, it rolls over. So if you have 10 grand of losses in 2021, you can take 3 grand in 2021. The 7 grand rolls over. Then if you have another 10 grand, now you've got in 2022, now you've got 17 grand, right? 10 and 7. You can take 3 grand that year, and then you're going to roll over 14. And that amount rolls over forever.
Until you use it up.
Yeah. Deborah alluded to other things. You can have other types of capital gains that then you can offset it with. Like if you have a loss from virtual transactions, and then you have a gain on your Apple stock, you can offset the loss from the virtual transactions with the gain on the Apple stock, because it all goes together on that. Well, it's a different form than you were showing, Brad, but it all goes together on the same tax form. It all gets to the same place. So those capital gains, other things you could sell, investment property, you could sell a rental house, that would be capital gains. Those would be offset by the losses. So there's other things you can offset these losses for or with, offset them with. You just can't deduct more than $3,000 worth of losses in any one year as a net. If you have 20,000 of gain and 20,000 of loss, you can use all those 20,000 of loss against the 20,000 of gain. You just can't have more than $3,000 of losses at the bottom line.
Excellent. Excellent. Okay.
And
Go ahead,
I had one other question just from a CPA perspective. Of the crypto tax software out there that touts that it interfaces, because I know my accountant, for example, uses software. I don't know what brand he uses, but he uses software that's, it's all virtual. We send it in electronically. Everything's, digitized. Is there a particular brand of crypto software that is easy to interface with most brands of your tax accounting?
What happens is they all end up in that CSV form, and then they can get either imported or you can attach the data to the tax return. That part is not really that significant. I wouldn't say at this point there's direct integration of any value. And the problem with going that route is there are at least 8 big players in tax prep software. And if you try to choose an interface that meets, one particular tax preparer's software, the next tax preparer uses somebody else, and somebody else on this meeting is going to be, well, my tax preparer uses one of the other 8 programs. So it's it's a difficult thing to try to implement and integrate.
Okay, yeah, that's a good transition. Karen asked, she says, I'm so confused. Can anyone suggest capable CPAs for tax preparation services to help with that? And I've kind of found a little bit of that when I was exploring, because before I used Cointracking Info for myself last year, I looked around for some other ones just because, I discovered there was more out, 4 years after I had started with Cointracking Info. And the one that I looked into the most was this CryptoTrader.tax. And I just found this page on their site talking about what Deborah was referencing is the tax loss harvesting. So that might be something to look at. I did add this link to the Google Doc. But what I wanted to talk about a little more is part of their process is integrating with tax preparers. And so they've got these partners and their model seems to be the tax preparer would use the CryptoTrader system, and then they would send their client to this system to enter their information or do the integrate. So they're kind of becoming the in-between or partner between the clients and the preparers. So Karen, this might be something to look for. I think I don't want to dig through the whole site, right now, but I believe I found a place, I think it was under, somewhere in here, where they actually listed specific CPAs and tax preparation companies or individuals in different areas that use this system. So maybe you're in Oklahoma and there's somebody in Oklahoma that uses this system, and then you could work with them on filing both your federal as well as your state tax return. So I would look at CryptoTrader.tax.
All right, I'll check it out later.
Yeah, great. Okay. Let's see, some more questions in chat here. Okay, yeah, good point. Let's see, crypto. Wait a minute, Ken, now you're confusing me. This is on purpose. You said CryptoTax.traders. You mean CryptoTrader.tax? That's Coin Ledger?
Yes.
Okay, good. And I'd seen a reference for that. I don't know why they aren't doing that yet, but yeah, so if you guys see that reference as Coin Ledger, which then is close to Zen Ledger. Okay, we got so many Canadian short term. Okay, here's a question for you back from Brandon. Does the IRS, or how does the IRS distinguish which portion of your sale is considered long-term versus short-term, i.e., does the IRS compare the date of the purchase to date of sale to determine which was held? Yeah, I think that would be, yes, that's how they look at it, because that's what determines the sale. So there might be a case where you had 10, you hit it big and you had 10 Bitcoin, but one of them you bought 6 months ago and the other 9 you bought 10 years ago when it was really cheap. So in that case, you'd have, one part of it would be a short term and the other part of it would be a long term.
But I think the important thing, there is an actual term to specify which cryptocurrency trade you want to use. If it's not a first in, first out, or I should say last in, first out, which is actually the one that the IRS defaults to. Jeff, could you help out here? Is it called defined? And these tax softwares, some of them talk about that. That's the one you want to get. You want to be able to define which one you bought at a certain dollar value and what you sold at a certain dollar value. So you can properly calculate. And it's like a defined trade, or Jeff, do you know what I'm referring to, where you actually specify which trades you want to use for a tax year?
Yeah, it's called specific identification. That's the method.
That's okay, specific identification. That's an important term.
Yes, that's the one where you can go through and say, okay, I'm selling this one or that one.
Yeah, and that's the tax software as I'm looking through this. That's the one I'm looking at, that feature to try to make this easier to deal with.
Yeah, they're all going to do that because that's
Okay.
critical, or that, I mean, it's like a base feature that you've got to be able to do.
Okay, great.
Okay, good. Any more questions on that? Let me see if Walter, if you wanted to unmute and share about the Coinly. I know that one that came up quite a bit in discussions. So I wanted to cover that, but unfortunately I haven't used that one myself. Can we get, let's see, can we get him to unmute? He's not. Okay. Oh, go ahead. Is that somebody? Nate? Okay, somebody asked, do you know anything about theft losses? I heard there's no cap on theft and fraud type of losses as it carries over fully year to year, but can only harvest a certain amount per year. And unfortunately, that's kind of come up in the sense that recently some folks getting into DeFi have experienced some losses. Where would that come into play as far as losses on the tax return when you actually got your literally your wallet stolen or your funds stolen out of your wallet, that kind of thing? Any thoughts on that, Jeff? Or
yeah, that one, I'd have to look that one up and go through and figure out how that applies based on the whole tax picture because of how a theft loss is deducted. So that it would also depend on how you were doing business, if this was within if you were doing it as a trader business or if you were, it wasn't your day job. So that one I'd have to look at the specific circumstances and answer. I'm sorry.
Okay. And that brings up a good point. Somebody had mentioned that they had a mining business that they were doing through an S corp. And the mining is just where we earn rewards for running our computer equipment or ASIC miners, that kind of thing. And those funds are considered income as opposed to, trading gains. Is any thoughts on running those kind of things through a different company or just yourself as an individual?
I'm not sure what the benefit would be to doing it that way. I'd have to think that one through. What kind of advantage are you trying to get? Are you trying to separate your activity? Or are you trying to make them transferable? Because everything is going to flow through at the personal level at the end of the day on those. So I'm not quite sure what the advantage is.
As an S corp, yeah. Barry, you want to jump in and share your thought on that? Or I know some people are trying to do the trading as a business, as their sole activity. Any thoughts on that? All right. Guess those unmute buttons aren't working as well as we thought. So let's take a look at let's see, me open a window here and look at Coinly. Real quick. Okay, go back to share. I'm just going to take a quick run through here to look at, let's see if there's a pricing option here. They always hide the pricing info. Okay, so Coinly, free forever up to 10,000 transactions. Essential features, but they don't do the reporting here, which is kind of the key that we want to get that form. So you got to jump up to the $49 per tax year for up to 100 trades, 99 for 1,000 trades, and then 279 for basically 10,000 and up. So definitely look at what you're going to pay for these services before you get into them. You might look at one and go, okay, I've only got 50 trades, so I can start here, where the other ones may want you to subscribe to a monthly service because they have a little different angle on that. Crypto trader, part of their angle seemed to be if the preparer was using their service, the preparer was paying for it, and then it was free to the client side. So that might be of interest as well. But let's get back to the features here on. Yeah, all the transactions in one place. 50 blockchains. I did see some references back on Cointracker that they were supporting the DeFi blockchains and some of the like the staking transactions, because those don't always show up on the blockchain like standard transactions. So I'm a little curious how that's going to work. That might be a technical issue we have to watch out for. Has anybody looked into that specifically as far as some of those, like airdrops or other, like I know on True Badger, they call them reflections, that kind of thing. But those don't come through on the blockchain as a standard send or receive transaction. Has anybody looked at that at all or seeing how those are tracked?
Well, I've seen those on BSC scans. They come through as part of the transaction, goes in a different place. But how they split it up and send it back to you, I don't know. I haven't gone back that way. I assume that you can see it because it has to enter into your wallet.
It doesn't always seem like it shows a value or a number of tokens the same way that a standard transaction does. Do you remember if you saw the quantity of tokens that were added to your wallet type of thing?
Well, you can see that in when you do the trade, where you can see how many are not coming. And then when you have the wallet, you can see the increase in your wallet balance. So I assume that they're showing that like an internal transaction. If you go somewhere like Energy World, and you look at their process, you can see internal transactions that are occurring over time to add value to the wallet, and they're documented on the chain. So I
Okay.
haven't gone and looked at those as a chain record because it's detailed when you look at the dashboard, but they do show it. So it must be recorded somehow.
Okay, okay. So maybe what we're seeing on BSC scan and that kind of thing isn't complete. What, there's more information on the blockchain. Is that kind of what you're thinking?
Yeah, that's true. There is more on the blockchain because what happens is there's the record that you're going to see when you do a transaction is the one that you initiate. And now if you turn that tracking around and you look at the wallet instead of looking at the transaction, then you'll see the things that happen to the wallet. So you could go look at transactions that are in blocks that come from your wallet. I don't know if you ever try to do that, but you can take your wallet address and go look, and you can see the ins and outs of a specific type of coin that has its own chain, not necessarily tokens, but coins.
Okay, okay, yeah. Yeah, this gets complicated. It's a good thing there's software for this, because this is more than 99.5% of us want to get into type of thing.
Well, it's extremely hard to believe that the government can tax the interim when it's not a quote real value by any legal measure until it's converted back into dollars. So the beginning of this conversation was enlightening in some ways, because I've always held that position that it's not money till you get the money out. It's an investment, but it's a loss until you convert it. So I get that they want their slice of the pie, but that to me seems much more real and much more defendable when I stand in front of a legal authority,
Yeah, especially from the standpoint of okay, I made this gain, but if you won't accept payment in that gain, and I have to, in order to pay you, I have to convert, or sell out to US dollars. That's,
yeah, and I'm still invested.
yeah, yeah. But and I guess if there was if we were able to do the same thing with stocks, like in your Fidelity account, if you could trade your Tesla stock for, IBM stock or something like that. But since we don't do that, we always go back to dollars, and then
That's because we don't have stock pools like we have liquidity pools for crypto. Because in stock, you're actually converting to a dollar amount through some kind of an OTC or through over the exchange that's exchanging them for you, is first converting it to dollars and then using your dollars to buy you back in. So that's getting you out and getting you into something else. And that looks like a taxable event to me. But when you're talking about taking this ethereal thing and converting it for this other ethereal thing, and then saying that I have some dollar value associated with the two of them, and I made some money on that somehow, and now I have to pay you in dollars, that doesn't make sense. I don't see how you could support that in court. I think I could argue pretty strongly that I didn't make any money yet. I'm just playing the game.
right. And literally tomorrow that asset could go to zero and be worthless. So how can I pay a gain? Yeah, that's a whole nother discussion, but I'm with you there. And that's my thinking at the beginning of the whole process.
Well, look at it like you got into something really volatile like Shiba Inu, and it went way up and it went way down, and you got in and it went way up, and you did some kind of transaction, and then it went way down and you lost a bunch of money. Even they want the other transaction because you made some money on the other side, but in the end you didn't make any money and you didn't convert it into any dollars. It's hard for me to think that they can legitimately tell me that I owe them something.
Yeah,
I think I'm still trying to play the game.
Yeah, but the market or the demarcation would be if you sold some of that Shiba Inu, or you traded that, back to Ethereum, so that you'd mark that, and
but I didn't convert the Ethereum to money, and
back
it's
to
not
dollars. Yeah, no, I'm with you there.
But it's an apples, my understand. I think if you want to be on the safe side, this is an apples to apples comparison. No matter what cryptocurrency you buy, or you're given, once you sell that cryptocurrency, you're going to have a loss or a gain based on what you originally bought or was given it with. Well, I'll give you like BlockFi, okay? So I get interest, right, in BlockFi. But until I realize that interest, until I pull it out, it's not reportable, it's sitting there. Like what you were talking about before, like points on an airline, right? It's cash back, it's in crypto, it's sitting there. If I pull it out into dollars, or if I sell it for another cryptocurrency, at that point, it came free to me. And then maybe I have $200 worth of cash back, then I have to report that $200. But just because you're going from one cryptocurrency to another, that's the key, right?
Yeah, well, that's where I think the argument lies, is because it isn't something that is being independently converted into dollars that are freely fungible. It's from an ethereal asset to an ethereal asset. They haven't classified them as money yet.
Yeah,
so when they start calling them money, then it's going to be a different story. The regulation is not caught up yet. And so I think there's going to be quite a few things to iron out about who owes what and how. And I think they would like to scare everybody into saying that, if you made $1, then I want my 10 cents. But it's not dollars, and it's slippery. I think it's slippery.
I would just be very cautious, because now the IRS looks like they will continue to recognize Bitcoin and Ethereum as property, but some of these others, like USDC, the stable coins especially, is very much up for debate, and I think that's going to move to security.
So what's happening in the industry right now to subvert that, and by the time that they have done that and they've tried to crush these, is that you're going to have algorithmic stable coins, which won't rely upon the dollar in any kind of peg. And so the peg will be the equivalent value of $1, but the dollar won't be involved in it as any kind of security. So
maybe not. And some of this stuff, you think is not retroactive, and I'd be very concerned. Some of these announcements, like regarding the crypto IRAs, may take effect in 2023, but I would just be very cautious about some other rulings being retroactive.
Yeah, well,
so I would just keep it all in mind. Yeah,
I'm generally a hodler. I'm not really into doing a lot of trading and trying to be some fancy, because I'm not that smart. But I know that there's growth in the industry, and I buy things that tend to accumulate value over time. What I argue with is it's not possible to buy things that are cryptos without using other cryptos in some cases. They don't have liquidity or any kind of a pair to move to. You're on a DEX, or you're on an exchange that doesn't have an exchange that goes to dollars, or you don't have an on-ramp. And so when you go to Coinbase and you get some Bitcoin and you go and put it in your wallet, and then it makes a bunch of money, and then you go back there and you say, okay, I want to buy some more of something else. You buy some Bitcoin to transfer. You bought more Bitcoin to transfer it, not to, so you buy it and you sell it and you buy something else with it and you go on your way. And if there was a change in there of, $5 or something like that, it was inconsequential to the action that you were really trying to take. That was slippage. So I don't see how they're going to chase that. And I don't see how there's enough there that they're going to find their way. And I just think there's a million different ways that it looks like that, where it's not really money after it comes on. Once it's on ramped, they're going to have a hard time. Look at how many things aren't. There is no record. It's a smart contract, and it's temporary in nature. And when it's gone, it's gone. And all the records that you're going to have is transactions in the blockchain. So the only way that they're really going to be able to chase you, look at you, is by records where you provide the transaction hash chain, or they have the actual wallet and they watch the ins and outs of the wallet. And that's where you want to look at, is where you're going out of the wallet and going somewhere. And that's where they want to.
I think at the end of the day, the forensic software, the algorithmic software is going to be there. Your keys will be much easier to locate than you realize, especially with the exchanges when your identity is assigned. And these, at some point, maybe a transaction may be lost, but I come back to Anthony. I think you really have to do your due diligence with the IRS and cover your tracks and write your letters and, do whatever you need to do. This is going to be very, very gray area for a while.
Yeah,
I have
okay,
a small question regarding this like cryptocurrency. So say I buy Bitcoin. I think you already answered, but I'm a little bit confused. And on Coinbase, say I convert it to Ethereum because now I see that the price of Bitcoin has decreased and price of Ethereum has increased somehow. I'm getting some profit. So is that also taxable? And I haven't cashed it out. Like I have only converted one crypto to another, but I haven't cashed it out into dollar. Is that also like taxable?
yes, that's the way the IRS is looking at it now. When you trade that Bitcoin for Ethereum, that's a taxable event. If you trade the Ethereum for Litecoin, that's a taxable event, even though you have not cashed out to dollars. And that was kind of the discussion at the beginning that Anthony brought up. And he and Scott and I kind of have the similar philosophy. Just when you think about it, it seems to make more sense that we wouldn't pay until we went out to dollars, but
Right.
that's not what the IRS says currently.
IRS is like, give us everything. What you want.
Yeah. So stay tuned. Well, I'm sure we'll be talking about this once in a while. These kinds of questions are, come up, sometimes in other meetings, kind of just at the end of what we're talking about for that topic that month. And we throw these ideas around. So, yeah, stay tuned and go from there. I had another question. Megan jumped in and said, has anyone experienced with tax platforms for minting or trading NFTs? I'm going to try Zen Ledger. Megan, if you want to come on, I've got Zen Ledger up here. Have you looked at it at all, or why did you pick that one? Or give us a little background there. Let's see.
You guys can hear me?
Yeah, I got you now. Go ahead.
Hey, so actually Zen Ledger kind of came to me through, I don't know if you guys know, they came out with like an NFT tax guide. It was like a minted thing. It was just some people in that space that I knew. So I bought the ledger and it came with a subscription to Zen Ledger. I'd already looked at token tax and reached out to Legible, but everything that I was asking or my specific questions, it didn't seem comprehensive enough because it was more targeted towards US, whereas I'm a Canadian CPA, so I've had a little bit of issues. So it's more just like, I'm going to give it a try. The whole like CSV importing is kind of hard when my clients have a lot of wallets and they don't necessarily know where all of their wallets are at any given point in time. So I'm kind of hoping to get a little more of a comprehensive build, hence why I'm doing a custom. But I'm just going to kind of give it a try and see what it is because I already have a subscription to it.
Okay. Yeah, I mean, you just brought up two or three things in my head went off that, why and how this is going to be such a challenge, just like the part you talked about them having the wallets and trying to get reporting out of them. So you're almost going to need a tool, like one of these, even if all that tool is doing is generating a CSV for you. And actually some of these you can do that, like with the Cointracking and the CryptoTrader.tax that I tried last year. I pretty much used them up till the point where I was ready to generate a report, and I didn't have to like pay that subscription fee or the monthly fee or whatever until I wanted to get a report out of them. So you may want to use one of them or try a couple just as a tool to generate, the CSV or that kind of thing.
I just know for like my particular situation is I deal with a lot of NFT artists. So there's a lot of moving in and out of their crypto wallets for like their minting, different amounts related to minting and or their own personal NFT holdings, move in and out of different wallets. And it's just kind of like the intermingling of a lot of these things. And I know a lot of these exchanges are pretty restricted to like how many exchanges can be used in them. So when I'm looking at Nifty Gateway and OpenSea and kind of trying to bring those and incorporate it, hasn't been very pretty.
Right. And if you can't get all of them, then you've got to do something.
Then your reporting is kind of useless.
Yeah. Or
and so like a lot of the times for like the smaller guys last year, I just had an Excel file that I was importing everything either out of like Block Explorer or just kind of the CSV files and then manually doing it.
Mm-hmm.
And that's what I'm trying my best to avoid this year.
Yeah, hopefully there's some tools and they keep, I think, as professionals, you CPAs almost need a whole little, group to try to figure this out, what's best on the professional level too.
Yeah, well, basically we're having to learn coding now. I'm like taking Python and SQL courses.
Oh, yeah, that's a little much. There should be some support from your, some of your trade groups or something like that on that. But, okay. Walter,
Brad,
I'm sorry, go ahead.
Sorry, quick question. You mentioned that you're using Cointracking now, but you used CryptoTrader.tax last year.
Right.
Between the two, which I assume you prefer Cointracking now?
Yeah,
Is it much of a difference?
It seemed to be a little more robust in the things that it's, as far as the different ways you could export the data, and it supported more exchanges, that kind of thing. The thing that CoinTrader had going for it was that integration with the professionals, where they had, hey, if you need your taxes done, you click this guy in Oregon and he can do it using our tool, that type of thing, which was a great, just like somebody, I think Karen asked, hey, I need to get this done. I don't want to figure it out, but if I have that professional that can help me through it, that's of great value. Okay, here's somebody, it's the end. Walter, we're going to come back to you. Okay, now that you got the other Walter.
Yeah, there are two Walters on the call, Brad. Sorry about that.
Yeah.
I believe I'm Walter Yu, but I'll let you.
Hold on. Yeah, let me just read his question. And the other Walter, if you want to jump in and chat, that would be great too. But he says, I'm not able to share my tax software. I'm using different software to compare their accuracy. I found Cointracking.io makes lots of mistakes when I was moving my coins to a hardware wallet and later back to Coinbase Pro. Now is that, you've got Cointracking.io, that looks different than Cointracking.info. Okay. And later tracking, I have to manually fix a lot of the transaction. I was wondering if any of you with multiple, okay, if anybody has investigated their accuracy, that's a good question. The one thing I liked about Cointracking is when you have exchange, you have 3 exchanges and you've got 2 wallets and you're moving funds between those, it will recognize them as just transfers or not taxable events. So that was very, very nice. But then if, for example, I was getting some mining rewards that were coming into one of the wallets, and it was like, hey, identify this one transaction, which I did as miner rewards, and then the other 30 transactions from that same address then were all labeled as that and then categorized as income for that kind of thing. So I like the way that worked. But yeah, I didn't go into the details as far as the accuracy, but that's a good point. When you say, Walter, on the accuracy, do you mean that the numbers were off, like, like a rounding error or a number mistake, or that it was missing transactions here and there? You said you had to manually fix a lot of transactions. That almost scares me. What did you have to do to fix them? Okay, maybe he'll jump back in. Okay, Walter, you were asking about the closed-end funds. Grayscale provides tax stocks which cover to calculate the pass-through gain loss. So how do we prorate apply it when we sell the shares?
Yes, hopefully that's a straightforward question. So bought a bunch of GBTC recently, and it's a closed-end fund. It's a regular brokerage account. So obviously, they're going to pass through. They're not going to show up on 1099, right? So I'm going to have to do it. And so they have tax stock, which is great. So they give you these big tables, right? It's like a calendar. They go, okay, here's what we moved in, because they have to balance, right? They balance that because it's actually linked. It's linked to spot, right? So they buy and sell Bitcoin. So they have to pass it through to us, right? So that's great. So they're big, this calendar, and there's like rates. Okay, it's great. How much it changed? But then it doesn't really say, the example only shows you if like you're holding it. Like if you're holding it, okay, this is what you report for the year. But what if I sell some of it? Like what if I buy a year one of the year, or I just happen to have it and I sell some of it? So do I just take like those dates, go, okay, for these 200 days, this is what it started at, this is what it did, you know, gain and loss, and then just, that's my, you know, for that chunk of time that I owned it, you know, if that makes sense. Like, I'm just wondering, how do I actually convert it? Because I have to report it myself. That's my question.
Wow. Yeah, any of you CPAs jump in here on that? That's
Yeah, it's just a closed-end fund basically. In the end, it's just a commodity backed. You know, it just happens to be Bitcoin, right? But it could be anything else. It's just a closed-end fund that does a pass through. So, and they give you these big, you know, they give you the slots, right, on these dates. So I'm just wondering, how do we prorate that? You know, obviously want to do the right thing and get it to my CPA. You know, it's a family CPA, so I don't expect expertise in crypto. So I'm probably going to have to, you know, I'm ready. I got my spreadsheet of when I bought and sold, but I just need to know, like, okay, if I sell, you know, if I held it since day one of the year and I sell on day 200 for these 200 days, and I get my days in between, okay, here's the gain that Grayscale incurred, and then these are the losses or whatever that when they balanced. So whatever it is per day, then is that how I'm going to do it? That's my question. So
yeah. So are you not holding the GBTC within another account like a Schwab or a Fidelity account?
Oh no, that's where I have it. But the thing is, I don't think they're the way Grayscale makes it, you know, and it's a closed end, right? So I don't think it's gonna show up on my 1099. I think we have to report it, and maybe that's my other question. So it's in both. I have both like a standard brokerage account, and it's in my Roth IRA, or just IRA accounts in general.
Okay.
So just to be sure, I'm like logging everything, right? I got spreadsheet, that's great, buy, sell, price, all that good stuff. So I'm just wondering when I have to report it, because I probably will sell some of it over this tax year. So when I do sell it, you know, when I go back to their tax docs, which are really thorough, but it does, the examples they give you don't really talk about a buy and sell. They just go, okay, if you held it through this year and, you know, you held it for this, you know, like, so I'm just wondering, okay, do I just take that pass-through number that they give us and then I just prorate it? Is that the general methodology, not having done closed-end funds before? So anyway,
I would think the brokerage would provide some help with that.
Yeah.
okay. I just wasn't sure if, like, because so it is in Schwab, so I'm wondering if they, and I was just going to ask them, but I figured, you know, we're here on a meetup, but then would it normally just show up on a 1099 even though it's a closed-end fund?
I would think they would handle all of that, you know, everything that's in your account, regardless of.
That would be great.
Yeah.
I guess
that's
I don't
part of their
want a
job,
surprise at the
Yeah,
end of the year.
I'd agree with that. I would pick up the phone and just double check with Schwab, but you should get all that paperwork at the end of the year.
Okay.
And the IRAs you don't have to worry about. You know, that's just cash out, will be taxed. As you
because I was wondering, like, okay, they must be giving this to us for a reason, right? Like this thing, like half of that whole like tax prep thing is like these tables. And I was reading online, and they're like, oh, it's really onerous, and you have to calculate it, yada yada yada. So I just, okay, I mean, I don't have a problem doing that, but I was thinking, I was just thinking ahead, right? Like, okay, do I need to do some calculations? I got my spreadsheet. So anyway, okay, I can ask. That was my question. So
yeah, no, good question and interesting. I almost think they might be providing that data for people that are really into tracking, you know, how much they own and, you know.
Okay, I just want to be sure, because I was reading like just like on what is it, Seeking Alpha, right? And they're like, oh, GBTC, you have to do your reporting, and then there's this guide. So I went and looked at it, and Grayscale, they for every fund they have by tax year, right, based on these rates. So I'm just wondering, okay, and they give some examples. I'm wondering, I've been tracking all my buy and sells, and so I just want to make sure, what do I need to give to my CPA? So duly noted. I'll reach out to Schwab, and then I guess if I could sneak in one more, this is again really straightforward. So regular plain old crypto in Coinbase, again, buy sell, 8949 form. Is that what I'm hearing? It's just very simple. I held it, I sell it, I need to report it. Is that what I'm hearing?
Yeah, that would be like just one line on that form we had up on the screen earlier, where they had multiple. So that would be easy. And I think Coinbase is almost going to like provide a 1099 type of thing. I thought I saw that on their site, even
Because I thought I read also, I
Years ago.
think they refer back to the IRS website, and I think they refer back to, though that'd be great. I mean, again, that's the best case, right? But I'm just planning in case I don't see anything, or in case they tell me, right? I'm just planning ahead. So, okay, I mean, it sounds like either 1099 or 8949 then.
Well, yeah, the 8949 is part of what gets added to your
Right.
1040 or yeah.
Okay.
All right,
Okay.
good question.
Excellent.
And we got one
Thank you.
from Janet in chat. Has anyone used any of the DeFi liquidity provider protocols earning interest on yield farming? Since there is no access to CSV files, and since many of the tax softwares do not have the DeFi applications or their wallets, then how do we show the transactions on Coinly, for example? Janet, I don't know on Coinly, because I haven't used that one, but I do remember back on Cointracking when I was doing my taxes for this year or for last year that, paid this year, or submitted this year. I had just started doing some of that, stuff on the Binance chain as far as the DeFi liquidity pools and farms and that kind of thing. And there was something that I saw about coming soon that Cointracking was going to be offering that in the future. And I was glad to hear that, because I was thinking the same thing, like, oh my gosh, I'm theoretically earning, little chunks of tokens every day. That's going to be a chore to track. So I know Cointracking was doing that. And I would imagine the other ones were too, but I haven't got to that point because I didn't do any of that last calendar year, but this calendar year, for next April 15th, I'll have to look at that. And I would think as popular as they've been, that would be something, just like the NFT here on the Zen Ledger homepage is talking about. I think the DeFi issue would be covered for them as well. Cool. Any other questions, guys? Let me stop sharing that. Let's see. All right. Yeah, Deborah, anything else to add? We're just about out of time.
On our little optional sign-up sheet, I listed 4 that I was looking at. That was Coinly, CryptoTrader.tax, Cointracking, and Accointing. If anybody wants to team up and compare notes on ease of use, if I had maybe next year, Brad, like I did the Roth IRA, maybe we can do a comparative spread of these things practically.
Yeah, it comes down, it's a lot of numbers. I mean, and everybody's situation is so different. As far as what tools and coins and wallets, everything we're using. Yeah. Christine, yeah, the recording link, it's probably not going to, I probably won't have it till late tonight or tomorrow. I will put it in the Google Doc, and it always also goes on the let me share this here, the event page in Meetup. This is the event page for today's event. So I always post it in like the comments down below here. Yeah, so I'll put it down here when we have that link. And then you can also, if you go to videos.fresnobitcoin.com, that will forward you to our YouTube channel where all the past recordings are, and then you'll see them listed there. But I'll have a specific link to the specific recording for today, but you can always go here and you'll see all of them listed there as well. Yeah, okay. If there's no other questions, anything else, we will call it a day. Let me put up my contact info. If you guys want to put your contact info in chat, I'll try to copy that over to the Google Doc. We also have a member directory with the idea that we put our information there with a little blurb about what we're interested in. And then if other members want to contact us, then they can do that type of thing. But let me get my other one up here. So here's my contact info. If you guys have any questions or anything to share, that kind of thing, just to give you an idea what I'm doing as well. The DeFi farms and pools, We talked about a little bit of, I'm doing a little bit of mining, more so to heat my home than to generate income. I dabble a little bit still with that BitsGap and KuCoin for the trading bots. And then I'm doing these, the Meetup once a month. I generally have a group crypto class once a week on Saturday at 9 o'clock Pacific time. And then I'm doing individual one-on-one coaching with folks to, help them get set up with a wallet or how to get things going in their exchange or anything like that. If you have any questions, I can help with that as well. Looks like a couple more questions in chat. Good. Yeah, some props and everything. All right, guys. With that, we will call it a day and hope to see you next month. We're going to be talking about the True Badger platform, which is on the Binance Smart Chain. They look like they're really solving some problems that are out there on the crypto space, and something we can take advantage by investing a few bucks in and hopefully see some good gains in the next 12 to 24 months. So with that, have a great rest of your day, and we will see you next month.
Thank you.
Thank you, Brad.